Hello, and welcome to the trading day right after the first MPC rate decision meeting of 2026. And yes, it was as expected. It was a cut by 50 basis points. Some expected 150, some expected 25, but we got 50. And definitely we've seen markets already reacting to that, or maybe priced in so far. But let's get a check on what's playing out in the oil markets this morning. We've seen oil prices, they're hovering near a 7-month high. Today, as the threat of military conflict between the U.S. and Iran that could disrupt supply, continued worry to investors there. And definitely, when there's supply worries, then we see the prices go up. That's what we've been seeing so far throughout, January into February. You see Brent $71.23 a barrel, 0.65% up. Brent's continuing to stay above that level for now. WTI crude, that's $66.12. Brent's price has reached the highest since July 31st, and both contracts have held near that position. So far, it's all in the back of U.S.-Iran negotiation, and definitely, seeing an end to nuclear and ballistic missile program in Iran. So, part of the negotiations there, we're seeing the impact right there on the oil market. So if you're longing right now, I guess you're technically in profit. All right, to other stories now. Nigeria is set to begin exporting a new light sweet crude grade known as Kofun in March as part of efforts to boost oil production and consolidate the recent recovery in output. The Nigerian National Petroleum Company Limited disclosed this, and the development, which was confirmed by a spokesperson of the Nigerian National Petroleum Company Limited to Reuters, says the move is expected to strengthen the country's position within the Organization of Petroleum Exporting Countries as it seeks a higher production target and improving output levels. So yeah, there we have it, a new grade coming into the market there. Then we see the Dangote Petroleum Refinery. They've concluded an offtake agreement with 12 major petroleum marketing companies to distribute between 60 million and 65 million liters of premium motor spirit daily across the country, in a move expected to stabilize supply and deepen Nigeria's fuel self-sufficiency. President of the Dangote Group, Aliko Dangote, disclosed this in Lagos, noting that the structured framework would guarantee nationwide availability of petrol while exporting surplus volumes. And let's get a check on how your money performed yesterday. Definitely was seen still positive territory right there for the NGX. It's still positive year to date, but yeah, we did get that drop yesterday, about 0.91% market cap. That's in 124.82 trillion. Then we see for activity yesterday, 1.13 billion. That was traded in stocks. Then we see top trades. All right, there you have it, 0.91% down. Top three gainers, see Jai's Bank added like 10%. Tachuk added about to close at 99. Now that's about 10% up. Then we see the top trades: Japan Gold, Access Core, FG Insure, trading 75 million yesterday. So definitely profit taking right there on the day of the decision. Some say it had nothing to do with the MPC decision, that was already priced in, but it's quite funny that it happens still. Jai's Bank, 10% up. Infinity, 9.83%. The losers there, we see Dark Communication there closing $2.25, down a full 10%. Tantalizers also recording profit taking there, 10% down. All right, let's get to some other stories now, and looking at also at the markets. This time we're looking at the fixed income market there. We have news there with the FGM bonds there. You see demand hitting 2.7 trillion. That's for the federal government's Nigeria bonds, estimated 2.7 trillion at the recent auction, signaling robust investor confidence in sovereign debt instruments, despite, broader economic pressures. According to market reports, subscriptions far outstripped the amount offered, reflecting strong participation from both institutional and retail investors. The high demand comes against the backdrop of persistent liquidity in the domestic financial system and attractive yield levels on government securities. Analysts say investors are drawn to FGN bonds as a relatively safe haven amid interest rate volatility and expectations of the policy shift, which we got yesterday. Still looking at the decision yesterday, the governor, Salami Cardoso, they said it revealed that 20 Nigerian banks have fully met the new minimum capital requirements under the ongoing recapitalization program, marking a significant milestone for the nation's financial system. Speaking at the conclusion of the 304th monetary policy meeting in Abuja, Mr. Cardoso said that a total of 4.05 trillion naira has been raised by banks ahead of the March 31st, 2026 deadline. That figure reflects investor confidence, with around 71% of capital mobilized domestically, and the remainder coming from foreign participants. So it's coming both ways at this point, but more domestic at this time. And we see the Monetary Policy Committee of Central Bank, they cut the interest rate by 50 basis points, leaving all parameters stable. This comes 5 months after the interest rate was reduced by 50 basis points. The regulator, however, retained other parameters, including the cash reserve ratio and 45% for commercial banks and 16% for merchant banks, while it increased applied to non-treasury single accounts, public sector deposits for 75% CRR for better management of liquidity. Economists who spoke to Channel Television believe the rate should be reduced even more. Our business editor, John Mekwa, has more.
It's the first Monetary Policy Committee meeting in 2026, and members believe it's time for a moderate cut on the monetary policy rate, reducing interest rates from 27% to 26.5%.
The committee's decision was premised on a balanced evaluation of risk to the outlook, which suggests that the ongoing disinflation trajectory would continue, largely supported by the lagged transmission of previous monetary tightening, sustained exchange rate stability, and enhanced food supply.
The exchange rate is not the economy.
Many economists had expected a deeper cut of the rates, especially with the trend of declining inflation. One of them is the Chief Executive Officer of Economic Associates, Mr. Ayo Teriba.
If you are connected, if you are concerned about the fiscal situation, you are connected about real output growth, you are connected about business investment, whether they are liquid or not liquid, if you are concerned about consumer spending, whether the households have enough to eat or spend, you won't do 50 basis points.
From 10.8%.
The CBN governor, however, believes that there's an urgent need for fiscal discipline from not just the monetary authority, but also the fiscal, for sustained gains of the reforms.
Because when you talk about fiscal rascality, it's highly displayed by the executive arm of government. All you need to do is to go to the street of Lagos and see an entourage of a governor and how many cars are driving with that governor. So all this, you need to go and see governors traveling for doing white elephant projects in a state that does not, in a state closer to Lagos, and Lagos have not been able to even generate more inflow in terms of passengers to their airport. They are trying to build a new airport. All these are not going to enhance the life of your people.
Mr. Cardoso also disclosed that 20 out of the 33 banks have met the new minimum capital requirement, which has March 31st as its deadline.
The banks are recapitalization, and they are bringing in more inflow into the banking sector. Now, how will this inflow be managed is another challenge that the CBN, I don't think, are prepared for. Because now what we will see when those inflow comes, you see that even it's already starting, that the banks are telling you that most of the inflow we are going to get is to establish banks offshore.
The next meeting is slated for May 19 and 20, 2026. John Mekwa, Channels Television News.
Meanwhile, reactions are trailing the CBN MPC's latest cut in its benchmark monetary policy rate, which is lower by 50 basis points from the previous 27% rate. Economic and Policy think tank Center for the Promotion of Private Enterprises says the move reflects improving confidence in the economy and a strengthening of key macroeconomic fundamentals. In a statement released yesterday by its CEO, Dr. Muda Yusuf, the CPPA say the CBN's decision is commendable and reflects a positive shift in economic conditions. However, the think tank says the CBN's attention must now shift to strengthening monetary transmission mechanisms, coordinating effectively with fiscal authorities, and addressing persistent core inflation for the new policy to achieve its intended impact. All right, let's shift gears now. Let's find out more about this latest decision and get some, forward guidance. Investors definitely want to know the path, ahead for monetary policy. There we have the decision yesterday. It's cut 50 basis points. Now it's 26.5%. I'm sure some of us have been used to that 27% level. So now start getting used to 26.5% for MPR. Join me now to unpack this. We have Dr. Victor Obo, is the Director, Monetary Policy Department at the Central Bank of Nigeria. Joins me from our Abuja studio. Great to have you on the show, sir. Good morning.
Good morning, Ladi. Good morning, Nigerians.
Good morning, sir. It's great to have you again. And definitely after the first major meeting of 2026, definitely we're having a lot of reactions, trail this latest decision. But it was quite expected. A cut was expected. Some expected it to be higher, but we got 50 basis points. What macroeconomic signals gave the committee confidence to cut the MPR to 26.5%?
Thank you once again. The communique was very clear yesterday, as read by Mr. Governor, Mr. Olayemi Cardoso. The decision of the committee to deliver 50 basis point easing was strategic and based on the outcome of a rigorous assessment of data before the committee. It was premised principally on the improving conditions of macroeconomic indicators. Ladi, you will agree that inflation has moderated consecutively for 11 months. From March of 2025 to January of 2026, they have recorded consecutive decline in headline inflation. And particularly for January, we saw a huge and significant moderation in food inflation from double digit to single digit, which provide a lot of comfort. You agree with me that the sustained stability in the foreign exchange market has also helped to stabilize prices. External sector accounts have been favorable, with most of the indicators in the surplus territory. And so the committee conclude that given this scenario and the effect that the lag impact of previous tightening is still permeating the economy, the committee is of the comfort that it should embark on what they call a cautious or marginal easing, which again demonstrates the sensitivity of the committee to encourage growth.
All right, so Dr. Obo, if we do a throwback to 2025, most of the year we did see inflation that trended downward. According to the data, the MPR was stable, 27.5% most of the year. Then we had that one cut. Then the next meeting after that, it was a hold. So with this cut we're seeing now, is this the beginning of an easing cycle or just a one-off calibration?
Ladi, my answer would be that the committee has adopted a data-driven approach to rate setting. And so the decision either to ease or to retain depend essentially on the outcome of the data. But what I will assure you is that the committee is highly responsive to what the data is saying. So it comes one at a time. But it's important at this point to also mention that the outlook for inflation is showing that the disinflationary trajectory will continue in the near term.
All right, so how much weight was placed on, inflation moderation, seeing, the data so far from 2025 into 2026, I guess inflation wasn't that much of a concern, seeing it's been trending downward. That's for the MPC. How much, weight was placed on that, compared to growth? Because definitely we know when interest rates stay high, you're sacrificing growth. So how much weight was placed on inflation moderation versus growth concerns?
Okay, I'm sure you are talking about the balance or the trade-off between inflation and growth.
Exactly.
Yes, we are so much interested in growth because the overall essence of macroeconomic stability is to support growth. But you will agree with me that sustaining the stability is fundamental to have sustainable growth. So while the trade-off remains, it becomes the issue of the chicken and the egg. Which one comes first? We believe, and in line with macroeconomic theory, that macroeconomic stability is critical to achieving sustainable growth. The last review that I had and I watched from your program and the comments of analysts showed very clearly that we have had a regime of, public confidence and investor confidence growing in the economy. And these are the indices that will engender capital inflow and investment-related capital. So we believe that a sustained macroeconomic stability is fundamental. Again, we are very careful, the committee is very careful to ensure that we don't fall into a relapse, a situation where the gains we have achieved over time are reversed. We want to avoid that. And that is part of the reason why there was a cautious approach to the easing that was recorded yesterday. So in a nutshell, the point I'm making here is that while we pay attention to growth, we want to ensure that a stable macroeconomic, ecosystem is necessary to engender or deliver that sustainable growth that we are talking about.
And when you look at the currency market, once the Apex Bank moves to, cut interest rates, normally that, transmits into weakness, for the currency. And if the rates are hiked, then, we'd expect a strengthening. Do you think this rate cut could weaken foreign portfolio inflows or, put some pressure on the Naira?
Thank you very much. Our projections does not indicate that the marginal easing will affect the foreign exchange market. As a matter of fact, the foreign exchange market has been very, very liquid, and all genuine demands have been met. You can see a lot of indices that shows the strength and resilience of that external sector. You agree with me that the governor announced the significant jump and milestone we have recorded in our reserve position. Crossing the $50 billion mark is a huge, improvement. And what it shows is that we have enough in our arsenal to be able to defend the Naira when and where necessary. Let me let Nigerians know that unlike in the past, the central bank has become a net buyer, in the foreign exchange market. So instead of intervening, we're even buying off sometimes to cool down the heat in that market. If all things are allowed, I tell you the degree of appreciation would have even gone higher. So in response to your question, we don't envisage any impact of easing to weaken the naira in the foreign exchange market.
Okay, and recently I did see, in other African countries, the central bank cuts rates, but it takes a while, for the commercial banks to, do the same, when they're giving out loans to businesses and households. So how soon should businesses, and households here expect to feel the impact of this rate cut?
Thank you, Ladi. I believe that we allow the market to function, but we also have our tracking system, monitoring system. Our duty at the bank is to ensure that the policies that are decided by the Monetary Policy Committee are implemented to the latter. And then we allow the market to work. The transmission mechanism, we believe, will be very effective, and we are hopeful that the bank will respond appropriately to the changes in the interest rate, and that will translate to lower borrowing costs for investors and households in the Nigerian economy. A lot of work has gone into this in terms of coordination, even between the central bank and the commercial banks, operating within the economy.
All right, definitely, and we'll definitely be listening out for forward guidance there. Investors definitely listening out for that. Thank you so much, Dr. Victor Obo, as the Director, Monetary Policy Department at the Central Bank of Nigeria. Thank you for coming on today.
And thank you for having me.
All right, we'll take a break now. When we come back, we're talking betting, at this point. I'm not giving you short numbers, but there's a development. We'll discuss that right after this break. Just stay with us. Welcome back. Well, as the Lagos State government moves to introduce a 5% withholding tax on bet winnings, it raises important questions about how this policy fits within Nigeria's broader tax landscape and what it means for the gaming industry. Today we're looking at, beyond the headline figure to understand the legal and operational implications of this move from the perspective of tax and law alignment. Looking at how it's done in other countries, you see for South Africa, yes, but it's taxed as part of personal income. That's for gambling winnings. In Kenya, there's also tax there. 20% is withheld by the bookmakers. That's how it's done in Kenya. Then in the United Kingdom, no. Players keep all winnings. In the UK, Australia, it's also a no. Winnings generally are tax-free in Australia. Then Ghana, they had one before, but they removed that in April 2025. And now we have Lagos joining the League of South Africa and Kenya. Joining me for this conversation now, we have Adeyemi Adediran as a partner, Commercial Practice Group at Anderson's. Joining me right here in the studio to bring us up to speed. Good to have you, sir. Good morning.
Yeah, thanks for having me.
I know this is sad news for a particular segment at this point, because when we look at gamblers, especially in sports gambling, most of the time they're at loss. They believe that this is the one, and they make that loss, and nobody compensates them. I'm sure in their view, nobody's compensating them, for the losses. But when they make that windfall, you get a 5% hammer on winnings. How are you seeing that?
Yeah, first I want to say that it's not exactly a new introduction, because there was a withholding tax regulation that was introduced actually by the federal government last year. I think it was around July 2024, not even last year, July 2024, where they redefined the withholding tax regime. And the fundamental principle of withholding tax is to say that you need to pay your taxes to government at the end of the year or in March, as the case may be. Government is saying that, I can't wait till the end of the year to get that money. So I need you to pay some money up front, and at the end of the year, we do some form of reconciliation. So government is saying withholding tax is an advance payment of tax, and at the end of the year you take it as a credit against your tax payable. I think what the Lagos State is now doing is to enforce that regulation that had been issued in 2024, making it known to bet industry players that there's a withholding tax on those earnings that needs to be paid, and is an advance payment of the personal income tax of those individuals that will be winning those bets.
Because I'm trying to imagine, okay, fine, maybe if you're employed, you will definitely pay tax on, on your income.
Yeah.
And if winnings is part of your income, and you're already charged a withholding tax on the day you win, at the payout,
Yeah.
your tax there.
Yeah.
And after all of that, your income, that will still join, be part of your income,
Yeah.
the winning.
Yes.
So would that also be taxed as income?
So fundamentally, the tax laws does not exempt gaming income from tax. But the way it is structured currently, most of the bettings take place online, and people make bets, and there are individuals that the betting company may not be able to account for their personal income tax in all. So government is saying, withhold this tax first. I'll deal with the taxation of all their earnings afterwards. And government is saying, okay, whatever it is, this withholding tax that you've withheld will be a credit. So it's a consolidated return that you should actually make in March of the respective year of all your earnings, and account to the government to say that, okay, this is my tax on all my income. The laws does not specifically exempt net earnings from betting from tax. But what government is saying, in case you do not pay tax on that all earnings because I cannot track you, at least the betting company would have withheld 5% and remitted to me.
Right. So, looking at, other countries, we see South Africa, yes, they do tax winnings, gambling winnings. Kenya does the same. But why is the likes of United Kingdom saying no? Players, keep on winning. Australia, generally tax-free, for winnings. Ghana, they had that, withholding tax law, but they removed that.
Yeah, I would say that maybe the fundamental principle is that if you keep all the wins and all the money to yourself, at least it's going to help to develop the economy. You're going to spend that money within that economy, and one way or the other, the government will be better off for it, because whatever it is, that money to a large extent is expected to remain within the economy. So the withholding tax regulation that Nigeria has currently is a better improvement from what it used to be. As a matter of fact, before now, if a customer withholds tax from payments due to me, I need to go to the tax authority to say, okay, you need to give me a credit. Then the tax authority will now need to engage that taxpayer to say, okay, Mr. Adeyemi is asking for his credit, but you've not remitted, and there's some kind of conversations that needs to hold. What the government has done now is to say, you withholding the tax, issue a receipt to the person that you withheld his money. And once I present that to the tax authority, it will be sufficient to recognize that credit. So I would say that if you look at it holistically, for the countries that are not saying, okay, this is liable to tax, maybe they are looking at it from the perspective of that this is going to help put more money in people's pockets in which they can spend in the economy. Nigeria is still evolving, and I would say some withholding tax rates have been reduced from 5% to 2%, based on that principle to say, okay, we don't want to take so much from you. Some that were 10% were reduced to 5%. So I would say we are in a journey, and the government is saying, okay, yeah, I don't want to withhold so much, but I want to withhold a little to also be able to provide those social amenities that those people that are winning the bets are going to enjoy. So
right.
I think...
But the betting platforms are already taxed. They pay taxes. They pay
that's a
company tax.
different conversation.
Right.
So you have the betting companies who have their tax obligations.
They have their tax obligations.
From the money they make from that business.
Right.
This conversation is respect to the people that win bets.
That win bets,
which is different from
people that struggle to win bets.
Well, I don't know if it is struggle.
It is a struggle. Most of them make a lot of losses before they make that one win.
That takes us back to the conversation of what the social contract is between government and the people. The people are supposed to pay taxes, and the government is supposed to provide the social amenities that better their lives. You struggle if you make a loss. The government does not or should not tax losses. So if a tax is withheld ahead, government is ready to make a refund. But if you make a win, government is saying that let's partner in this your win, and let me use some to better your life by providing the much needed social amenities. I know there are conversations to say that what is government really providing, but I think those conversations will continue to be held, and government will try to do their best in keeping.
I can imagine how the betting community, is taking this. But any implications for the, accounting system of these platforms?
Yeah, I would say that because the withholding tax regulations also introduce certain penalties, so they need to configure their platform to be able to automatically deduct at that point where they are making payments. And also, they need to remit at a particular time, I think the 21st day of the subsequent month, after those deductions have been withheld. So the betting companies need to be aware of their obligations with respect to that. And I would say that they should configure their platform to be able to automatically issue receipts when they withhold taxes, so that the person that has suffered that 5% withholding tax can then take that receipt to the respective tax authority and get his credit. The challenge I see, though, is that because this betting is taking place online and people are in different locations, the betting companies would then need to try to remit to the respective locations where these people are residents. So if I'm in Oyo State and I'm betting and the betting company is in Lagos, my tax is due to Oyo State. So are you going to have develop that modality to remit to Oyo State government? I think they can, because everything is done online now. But some states are still not filing taxes online. So those challenges will come up.
Right. So, going forward, do you think, at some point there'll be a lot of pushback, and, maybe, the government might have to, rethink this?
Yeah. There can be some pushback, but I want to let you know that it's not necessarily a Lagos State law. The regulations was issued.
Lagos State is now enforcing it.
Yeah, because it's enforcing it. So it's a national debate, not necessarily a state one. And there can be conversations held, and government may look at it and say, okay, maybe I should reduce the rates, or maybe I should provide some other incentives. But as of today, the law remains in force. Those conversations will be held, of course, between taxpayers and the government.
Right.
Government can look at it and say, okay, maybe I should revise the law. But as of today, it remains in force.
Because we know at the same time, gambling is a major issue. Some people don't know, they don't have limits.
Yeah.
And, they end up, suffering, mental health, challenges, trying to win and maybe making more losses. At the same time, is it possible the government could use this tax to, help some of these people?
Because the point you raise now is a social
it's a social issue.
Because there are people that are addicted to it.
Exactly.
But I don't think taxes can curb addiction.
Or maybe help rehabilitate them.
Yeah. So maybe government can say, okay, maybe some of these taxes that we are getting will go into rehabilitating people that are suffering from chronic betting. Maybe that can happen. But I would say that to solve addiction is a different ball game altogether. At the end of the day, because if you look at other vices, whatever bottleneck you put in place, people will go and borrow money or go and do, because it's an addiction. So social workers and medical health professionals will be able to provide solutions to that. But in this particular conversation in terms of taxes, government can also look into it and say, okay, maybe some of those funds can go into those rehabilitation. But fundamentally, the principle of taxation is that as a taxpayer, when you earn an income, the government is a stakeholder. They need some part of that income to be able to provide security, social amenities that you would enjoy. So it's a partnership and a contract. Yeah.
I guess 2026 we'll be hearing a lot about tax.
Absolutely.
I guess we're already for it. Thank you so much, Sir DME Didiron, as a partner commercial practice group at Anderson. Thank you for coming on today.
Thank you for having me.
All right, we'll take a break now. When we come back, we're talking housing. That's a moment. Just stay with us. Well, housing remains one of the most pressing socioeconomic issues in Nigeria, with the housing deficit frequently cited as a structural challenge. From a developer's perspective, the conversation often shifts from the scale of the gap to the realities of closing it. What are the real bottlenecks, land access, financing, infrastructure, or regulatory hurdles? Equally important is the question on viability. Can affordable housing projects be structured to deliver returns while serving lower income segments? Join me for this conversation now. We have Barrister Detola Latunji Laguda. He's a consultant with Homadale Realty. Great to have you on the show.
Thank you. It's my pleasure being here today.
Good morning. So, yeah, we often hear about Nigeria's housing deficit. We've seen figures put it about 14.9 million. That's the housing deficit. From a developer's perspective, what's the real challenge here?
All right, so you're correct to say that there is currently a housing deficit in Nigeria. However, it's not just about the number of houses that Nigeria needs. You need to, in the current project that Omaudi Realty Limited is currently handling, you will see that one of the major challenges is the cost of producing qualitative homes and delivering it responsibly to your clients. So you see that a lot of clients think that infrastructure such as drainages, such as water, such as power is being delivered externally. However, the developer is the one that borne most of this responsibility, you see. And then you also look at the cost of securing a land, the bureaucracy around land documentation. All of this boils down to the challenges that many developers face in trying to ensure that they partner with the government in producing or creating or putting out there affordable housings to the masses.
And, when you talk about affordability, definitely we know most of the city centers, they're really, really expensive. Looking at the Lagos market or maybe the Abuja market, we see that prices have gone up a lot. When you look at it from the last 4 to 5 years, that's for finished units and even for land. Then we have most of the platforms there, offering affordable lands, but most of the time they're really, really far away. Outskirts. Is it? From the sales we've seen, previously, they'll say, oh, the land is 20 minutes away from here, 30 minutes away from there. But when you're driving to these lands, they're really far away. Do you think, some of these buyers are actually, gaining, from buying some of these lands on the outskirts? Is it still a good hedge, against inflation?
Well, yes, I believe so. You see, when you look at affordability itself, the concept behind affordability is providing homes and providing opportunity to the middle class earners to be able to afford to own home for themselves. So when you see that many of the urbanization has brought about the fact that many of the lands in town has been fully or has high demography, meaning that it's fully highly populated, and then government is trying to ensure that even some of those places where is in quotes deemed as outskirts development is going there and people are beginning to occupy those spaces. And so I believe that if people see beyond living on the outskirts, and no place is an outskirts for a very long period of time as long as development keep happening, and I think that one of the major focus of the government of today is to ensure that there is development across all board, especially in the FCT. So if you see a place such as Gwarinpa at a point in time was deemed as an outskirts, a place such as Asokoro at a particular point in time is deemed as outskirts, but as of today you don't call it outskirts anymore. So outskirts is basically relative, and I believe that Nigeria should not be clouded by their judgments and saying that a particular place is an outskirts just because at that particular period of time enough development is not happening there at the moment. With time, if you agree to own a house at the outskirts, you see that with time development comes quickly. Immediately you see that a place deemed as outskirts, immediately Sikuje for instance, immediately developers start building houses, you see that the area gets populated. What seems to be an outskirt is no longer an outskirt.
All right, so looking at buying outskirt lands, when you compare Lagos and Abuja, which one do you think gives investors, a better bang for their buck? Buying an outskirt land, is it better to buy in Abuja or Lagos? Because I've heard, cases where, you buy some of these faraway lands, and you keep hearing the prices are going up. Oh, what you bought for 200,000 is now 1 million, is now 2 million. But when you now say, as the buyer, you've bought it already, but you want to sell it, and you're trying to sell it for that 1 million, 2 million, you can't find buyers.
Okay, well, you see, there is no one straight answer for this particular question. Reason being that Abuja is a place has more land than territory compared to Lagos, and as much as Abuja is well populated, we have a huge land mass, and then that is and a relative population that is willing to settle. And you see that with the level of urbanization happening in Abuja at the moment, you see that some places are quite crowded, while some places have low density population, and people are striving as much as possible to own homes for themselves. So investing in Abuja, for instance, gives you a good turnaround and investment in a very short period of time, because just like you said, like we said earlier, spaces considered as outskirts, as a low turnout, when you invest, and with the rate of development, with the way development is going in Abuja at the moment, you see that by the time you invest in a space that is in quotes considered as outskirts, you see that within a very short period of time, your money can be doubled. It's not a money doubling scheme, you see, but with the rate of development, because development is an ongoing thing. You see that just within a year or two, you are able to see another person willing to buy your property, and then you can reasonably and responsibly earn a good profit margin by reselling to other buyers. Yes.
All right. So
I believe that Abuja is quite profitable too.
Okay, so coming from 2025 and looking at 2026, what are the trends you think investors should look out for right now? Because I'm sure we have investors that want to be landlords so bad. What do you think is under the radar that they're missing right now in 2026?
I feel like investors should pay more attention to to the challenges around it. So, when you are well educated, you are more prepared to face the challenge head on, and then you have a more chance of success than when you're less informed and then you just put your money somewhere. So when you're well aware, you're very much aware of the risks involved, the challenges that you're likely to face, and then you are able to prepare better and then gain more return on your investment. So in the landscape of Nigeria, for example, where we have rigidity, some level of rigidity in land documentation processing. You see, and then timelines, the turnaround time for getting your land document, building approvals, and all of that. You need to consider the fact that, if I'm going into this line of investment, I should be ready to face all of these hurdles and make up my mind that I'm going to be successful at the end of the day, because it's not like it's an impossible thing. I'm so glad about what the government is currently doing. They have tried as much as possible to make the process easy through some of the policies that are currently ongoing. However, that is through some of the efforts that are currently being put in place. However, investors need more encouragement from the government also. They need to know that when they are buying a land, their land title is going to be secured for a long time. The tenure of the title is going to be secured for a long time. They also need to know that when they put in approval, submission for approvals, it won't take so much time. So policies in this regard would also aid investors to be able to put in their money and partner with the government in providing affordable and qualitative home owning or home ownership for people in Nigeria.
All right, definitely we're hoping for the very best, in that market so far, because the prices can be quite scary, at this time. Thank you so much, Barrister Ditola Olatudi Laguda. He's the senior real estate consultant at Homodale Realty and Summit Estate Global. Thank you for coming on today.
Thank you for having me.
All righty then, let's get a check now what's playing out in the global space.
Thank you so much, Ladi. Good morning, everyone, and welcome to the global news segment of Business Morning. We start from the United States. As expected, the president there, Mr. Donald Trump, evening yesterday, he lamented the Supreme Court's recent striking down of his tariff regime and claimed that he will proceed with his tariff agenda without congressional backing. And he called on the Supreme Court's ruling and called it unfortunate during his State of the Union address, claiming that the duties were a major driver of U.S. economic strength in the past year. Trump also says that the trade deals that his administration had negotiated with major global economies still remains in place, claiming that a new deal would be far worse for them. That's in quote. And the president is repeating his claim that his trade tariffs will replace the income tax system, having long touted a dividend payout from the revenue collected from his tariffs. And of course, reacting to both Mr. President and the Supreme Court, we have an economist now from the United States, had a conversation with our correspondent, Maria Bird, and sent in this reaction concerning those two issues.
The political meeting in the U.S. is quite significant, and what's happened here is that essentially the Supreme Court has reminded all of us, as we learned when we were school children, that indeed it is Congress's role to impose duties, impose tariffs, taxes, etc., rather than being done by executive decree. Now, some folks thought that this would be what we might call slam dunk in terms of Supreme Court rulings, with up to a 9-0 ruling. It wound up being 6-3, split along political lines to some degree, but there are still some issues up in the air, and one of them is the repayment of the tariffs that have already been collected. And so I expect to see some litigation on this going forward, and that will certainly have some political overtones here in the U.S. as time goes by. In the U.S., it's actually the importers who I think are going to make the most noise in the courts and essentially sue the administration to get those funds returned to them, to themselves as firms. So this is really where the rubber meets the road in terms of tax collection. It's the importers here stateside who wind up paying to the customs officers, and so they're going to be looking to get that money back. One of the things that was a reality under this initial round of tariffs that the president imposed was that they were uneven throughout the world. And now his response has been to impose a 10% tariff across the board, which is supposed to begin taking effect later today. The collection of that will take a little bit of time, of course. But not only did the president bring that 10% forward, which again will take effect, that has been threatened to be raised to 15%. And as with all of these things, there's going to be litigation involved, maybe some bureaucratic resistance even. And I keep coming back to that phrase, time will tell, because it is a volatile situation at the moment.
And of course, investors are also reacting to that. Correspondent Maria Bird sent in the close-off trade yesterday. How much impact this has had on investor sentiment?
The U.S. stock market rose on Tuesday as the Dow Jones was up nearly 0.8%. The S&P 500 was up 0.8%, and the heavy-tech Nasdaq was up over 1%, as many investors saw a major hike in software, as there was also some AI disruption easing, as it's clear that many investors were concerned about AI on Monday, as we saw major sell-offs on Monday in the stock market. But by Tuesday, they saw that the AI industry could be up for an upward swing. It's also clear that many investors are watching to see what will happen over the next few days and weeks ahead as the U.S. economy tries to make a powerful move forward.
Still reacting to that, gold prices rose modestly in Asian trade early today after declining in the previous session amid profit booking, as investors are assessing the impact of that new U.S. tariffs and awaiting U.S.-Iran talks, which is on later. I believe that's tomorrow. Spot gold was up 0.8% in early trade. It's now at $5,184.55 per ounce, and U.S. gold also gained 0.5% to $5,203.10 per ounce. And that's it for the news roundup. Global news on Business Morning.
All right, thank you so much, Ini. Just a quick look at what's playing out in the local bourse. Right now, the market is up by 0.35%, but definitely that's not the end of trade. Trade is still going on. Illa Lakes still down, about 3.85%. Guaranteed Trust Holding get a lot of attention. Fortis Global Insurance and Giants Bank getting attention right there. Thank you for watching Business Morning today. I'm Lade Williams. We're back again at 1:30 on Business Incorporated. Bye for now.